Hi guys, it's Thomas here from COTbase.com. Today I'm doing a special review on gold and silver because lately there's been a lot of talk about these markets, especially silver being in a short squeeze, and I just thought maybe some might be interested in what the Commitments of Traders report is telling us about this market. And this time, instead of looking at the classic legacy CO2 report, I thought we're going to go over and look at the disaggregated Commitments of Traders report for this market. Of course, we're talking about a metal, so let's just narrow down the markets to metals, and not only futures data is what we're interested in, but futures and options. So that's what we're going to be looking at. Now, for those of you who don't know what the disaggregated report is, here at COT Base, of course, we offer all the necessary information to understand reports, and we have a topic on disaggregated COT reports, so you can see how they look like. Now, basically, what the disaggregated report does is it further breaks down the large speculators and commercials positions into these four categories. Small speculators, let's just go back for a second. We have silver here. This is the classic report on futures and options data. And you can look at how the small speculators positions looks. If we go over to silver on the disaggregated report, of course, the 5 years chart, then you can see that basically the two charts are identical. Okay, so there's no change over there. It's really just commercials and large speculators that are further broken down into these categories. Okay, so if you want to understand who they are, you can read for yourself. Large traders that are not hedge funds are categorized into other reportables, and you'll see later why I emphasize that. Back to the review and silver. Let's just open the wider chart here. You can see that we had a little bit larger change in producers and merchants, 10%, based on a 52 weeks look back period. We've got small speculators at a 26%. Now, we switch to a 1 year chart. You can actually visually see that these changes, although are larger than average, there's nothing too, surprising about that. Okay, so this happens quite often. I would not be that surprised. So if you compare this change to the talk that's been going on in the media, one might ask, what's going on? Why is that? Why is there so much talk about it? I don't see it. I don't see anything unusual in how traders are changing their positions from week to week. At least in this report, there's nothing so surprisingly large. Like I would be more excited if I saw something like that from March of 2020. You see, there was a sudden change in managed money positions, also in swap dealers, and maybe a little bit larger in producers, but nothing too unusual. So going to the 5 years chart, let's try to understand stress levels in silver. Is there anything that shows us there should be a shift in the trend? Is this rally that's been going on coming to an end? And I don't see that much of hint that that's gonna come. So if let's look at first managed money. Let's even take down the rest of the guys. Just focus on managed money for a second, and you can see that basically when managed money is heavily net long, that sort of coincides with a top in the market. It's not always that obvious to see, but if you look carefully, you can see a correlation between managed money being heavily net long, or the other case, heavily net short for that matter. That usually coincides with a bottom in the market. That is not the case right now. So we're definitely closer to net long territory, but I would say that, based on this 5 years time period, you can see that they're roughly at 100,000 contracts net long when we're really at an extreme, and basically they're just below 50,000 contracts net long at the moment. So there's plenty of space left for them to reach those levels. This just simply says to me that the rally that is going on could easily continue. Now, of course, if you want to look at producer of this commodity or swap dealers, of course, you can analyze it and you'll get a similar result for that. So that's how you can analyze the report from the disaggregated perspective. And of course, I'm sure a lot of you saw this all-time COT extreme and other reportables in gold. If you remember, I said other reportables consist of large traders, obviously speculators who are you can't categorize into these other categories: swap dealers, managed money, or producers, and so on. So they are simply large traders present in this market. And you can see even on this 5-year chart, but if we go to the total history, that yes, they are heavily net long in gold. Now, does this mean that we should suddenly see the price drop? Is this a stress level? Well, the thing is, I've been looking at this for some time now. I don't really find that huge of a correlation between larger positions in other reportables and the price itself. Once again, I would rather look at managed money to see, like you can see that they were roughly 280,000 contracts net long at that area, after which the market slightly declined, but nothing huge, nothing major. So from the report, I'm sorry to say there's not much that is signaling a shift in the trend. Gold can easily continue its course upwards. We'll see what happens to other reportables, whether or not they're going to continue increasing their positions. You can speculate who they are. They could be large traders who have access to the markets and have been gradually building up their position in gold. They might know something about the future. We can go back in time and try to see if we find any correlation between larger positions in these other reportables and the market itself. So for example, here, I don't know how easy it is to see in May of 2016, they were pretty long in this market, but nothing really dramatic happened afterwards. They were even more long, net long over here, or at similar positions, or in December of 2018, and you can see the market just went even higher. So yeah, it looks strong, the signal, but you always have to look at who's the major player in the market itself. So if you want to give us a try and you want to go deeper, maybe look at other markets, you can do it here at COT Base. As you can see, we offer the disaggregated commitments as trades report. We also have, I think what is very unique, and I think we might as well look at the options only data as well, if that shows us something interesting or not. This is actually something new for me too. So here what we did at COT Base, we simply subtracted the futures data from the futures and options data to receive the options only. So if you go to CFTC, you're not going to find the options only data over there. So this is quite interesting. Let's have a look at that, if that is showing us anything extraordinary. And I think, of course, this bottom here from March of last year shows us something very interesting. Other reportables at all-time net short levels and swap dealers heavily net long. So that's something quite interesting. That's not the case right now, but it's interesting to see the price of silver being higher and still seeing a trend in other reportables positions going in that direction. So it really just shows you from the options data perspective that there's not much that is halting the rally in silver. This is really going on, and it could continue its course for quite some time before the report tells us otherwise. I appreciate your attention. Don't forget, there's a lot to do here at COT Base, analyzing not only the data itself, but you can look at the COT index, the move index, long-term trend indicator, a great tool if anybody is interested in what the course of the market is. So thanks once again for your attention. I hope you enjoyed this special review. Hope to see you next time. Take care. Goodbye.